Sat Shri Akal everyone. Welcome back to the Crypto Khalsa. And today we have with us a great product that I've personally chosen to invest in as well. It's called the Stable Jack. And interestingly, it's quite unique. The concept of yield on volatility tokenization, it's something very new to the market. And I have with me the founder, the creator of the stable jack. Sextus Pompey is his interesting name. So, how are you doing, man?
Hey Hardip, everything is fine. Thanks for having me today. How about you? How's everything?
Everything is great. Now I'm even happier to have you on this platform. Let's start from the top. Can you introduce yourself and tell us what brought you into the DeFi space?
Sure. My real name is Cihan. I am from Turkey, and I have started my journey in crypto in 2017. One of my friends has suggested me crypto, and it was it seemed to quite interesting to me, and since then I'm in the ecosystem. Since then I have worked with a few projects. I have worked for a VC and a research company as a researcher previous to Stablejack. I also currently work as an advisor to a Turkish bank for their DeFi and tokenization strategies. But for almost 1.5 year, we've been working on Stablejack, and I'm the co-founder there. There, I mostly work on the product, but also the business side of the things.
Awesome. And what inspired you to create Stable Jack? Was there a specific gap in DeFi that you were aiming to solve?
Yeah, actually, definitely, like I would say there were two reasons. The first one is Luna crash, and the second one is the USDC DPEG. The Luna crash was important for us because we believe that I was not personally affected, but I know many people get affected. But it shows us that people really love the yield, which is consistent and above market, but it should be safe. That was the one thing that actually we put in our memory after that event. And the second one is that the USDC DPEG, we realized that people love stable coins, and if something happens to that, people got affected really bad. So we decided that there needs to be something, there needs to be a yield product, or few other yield products which are safe based on US dollar and also should provide above market yields. So with that in mind, we started working on Stablejack. Previously, we were working on something similar to Ethina Labs and their synthetic dollar backed by the funding rate arbitrage. At that time, while we were working on this, it was not very popular, and no one actually believed in us, and they said that centralized exchanges is not a place to do those hedges. So we couldn't find any funding and any support for the project, and we decided to pivot. And Stablejack and the idea behind yield volatility and point market and points trading came from that pivot actually.
Awesome. I think let's talk about yield and volatility tokenization is a bit more. Can you break down for a very average user on YouTube, how does yield tokenization or volatility tokenization really work for someone who doesn't really understand these fine-grained concepts? Can you just break down for them a bit?
Sure. For example, we started with Ethina as an example, and I think we can go with that. As many of you know, Ethina is a yield-bearing stable coin, and it offers something around about 10% ish yield in most of the time. But it also has points associated with it. So when you hold stake USDE, you have a yield, but also you have a point of Ethina Labs. What we do basically is that you can consider there is a basket, and everybody puts their SUSD into that basket. So that basket is full of yield, but also points. So what we do basically is that, for example, would like to get some yield, so he gets all the yield from that basket, and I allow points, so I get all the points in that basket. So what that happens is that Hardip gets my yield, and I get Hardip's points. So I have 2x points exposure, and Hardip has 2x yield exposure. So
Hmm.
that's the basic logic, and like you can actually like use that same example for yield and volatility as well. For example, uh, each asset has its yield, let's say like LSD yield, but also volatility. And like this is price action, like when it goes up and it goes up down. So you can still like put the yield and volatility into basket, and
Hmm.
one side can choose the yield and the other side can choose the volatility, and this allows, for example, like you to have leverage long position to blue chip asset but without liquidation risk or funding fee, and the other side can get actually leverage yield on top of like their USD. So like this is the actual like the basic idea of how things work on StableJack.
Hmm. And how exactly do they get these yields from? Where is it coming from? Who is exactly giving that extra amount on these? So just for the basic understanding of a user, how do you get those yields? Where do you get those yields from?
So it depends on the asset, but for example, like let's stick with Ethina example. Let's
Mm-hmm.
say Ethina offers 10% yield, and you have one Ethina, and you have one Ethina, and I also have one SUSD. What we do basically is that if I give if I give you my yield, you have 20% yield. And if you give your points to me, then I have 2x leverage on my points. So that is where the yield is coming from. Like by exchanging the yield between users, you are getting leverage exposure, and I'm getting leverage exposure. But since you choose the yield, you are getting yield, and I'm getting points. Like we do not use like rehypocation, or like we do not invest users money in like the protocols to get some extra yield. This is just a basic exchange between users depending on their preference.
Hmm. Okay, that is a very interesting point to note. I think we'll dig a bit deeper into this. Um, a standout feature that definitely is one of the best things about StableJack is its principal protection, especially in leveraged points farming. Can you talk a bit about how the points token works and why is this such a game changer for users who are chasing airdrops or finding new opportunities to earn while they're like without investing anything or investing very less? How is this opportunity very new and interesting for any new person in DeFi?
So like to give you like a comparison, actually, like most yield protocols like StableJack offers you to get leverage points exposure, but like each of them has like a maturity date, and at the end of maturity date, your principal goes to zero if you afford leverage points exposure.
Correct,
So
correct, correct.
yeah, like this creates a risky situation for you. So because you don't know what the points worked for, and like if it didn't end up well, like you might having up losses, which
Correct.
could be like quite significant. Uh,
Hmm.
so this is a very risky situation for the users at the end. But like on StableJack, like unlike other yield products that use AMM model, we use a pool model. So this is the actual like the same thing that I explained with the basket. So in your basket, like to the basket, you do not put your principal, you just put the points of your actual like collateral asset. So since you actually like hold your principal to yourself, you are not losing your principal, whatever like the points might end up with. So this also actually like opens up the possibility of using those tokens as collateral in lending markets to lever up your position to increase your exposure. Uh, so this is the basic logic by actually like separating the principle from the point itself. We allow you to like have principal protection at the end, and also StableJack does not have maturity dates, so this is the another reason why you have principal protection.
Hmm. Okay. So I'm seeing you support a variety of collaterals, right? From LSDs to RWAs as well. Um, What kind of opportunities does that open up for investors, and how do you ensure flexibility while managing risk? For an average user who wants to earn through your platform, um, what are the opportunities for him? If you can make him understand in a very simple, naive way.
Yeah, sure. For example, we offer right now two types of products, like two types of collateral. Let's say the one is stable coins and the other is blue chip assets. So, for
Mhm.
example, if you hold, like if you believe that the market is not going to go up significantly, and like it will like chop down or like it's going to go negatively, you will probably like hold stable coins. So,
Mhm.
but like it doesn't need to like sit idle and it needs to work. So like you can put them into work on stable jig, and like if you believe that points should work more than yield, you can opt for the points. But if you think that like I don't know what is going to happen with those points, I want solid and clear yield, you can opt for the yield token and get leverage yield on top of your stable coins. This is the one thing. The second thing is we accept LSDs. Like we are currently on Avalanche and Sonic, so we have Avalanche and Sonic LSDs on our protocol.
Mhm.
Basically, on Sonic, you can get leverage Sonic yield while preserving your exposure to collateral asset. So
Mhm.
like you can have yield, but also have S exposure. If you believe that Sonic ecosystem will do well in the future, you
Mhm.
can have the best Sonic like you basically like you can hold Sonic with steroids. And on the
Mhm.
other hand, if you believe that Sonic is going to have a airdrop soon, and if you believe that that's going to worth a lot, you can offer the Sonic points so through points token, and you can get leverage exposure to airdrop with principal protection. On Avalanche, currently, like we are offering yield versus volatility product, which is basically you can right now long AVAX without liquidation risk. Uh,
Mhm.
right now, like this product is live almost like 10 months, and like for the 10 months, you know that like how many people or like how much dollar has been liquidated so far, but users on Stablejack like got never liquidated, and also they didn't pay any funding fees so far. So actually, like it is the safest like cheapest option to long any blue chip assets. And like we have some users actually like who have been holding their positions for almost like 10 months, and I have never actually like seen any traders holding a leverage position for 10 months because you get either liquidated or
Or
like
you
you
can
have yeah,
manage the pages, right?
or funding fees
It's
will eat.
really interesting proposition. I think this has to be highlighted. I mean,
Yeah,
one of the I have not known any platform where any long position can be held for more than like 1 or 2 months.
yeah,
They have to manage that. Otherwise, they have a risk of getting liquidated. So this is something that I would like to highlight to all the viewers who are going to watch this. You can actually long any asset using StableJack without having the risk of getting liquidated, which is a very interesting proposition, and there is no funding fees that needs to be given.
yeah.
Can you make our users understand what funding fees is in a very simplistic language?
Yeah, funding fees are the fees that you actually pay if you like long or short any position on a centralized exchange or like decentralized exchange if you use leverage. Like it is a variable fee, so it can go up to like 1,000 percent, or maybe it can go down to like minus 50%. Like you never know this, but it can be costly for traders actually if they plan to hold a position for a long time.
So without any extra funding fees, they can hold the
Yeah,
position on stable jack and without getting any risk of getting liquidated, which
yeah,
is very
definitely.
interesting. Um, Awesome, awesome. I think it's getting pretty intense. Let's make it even more intense. One of the most interesting things that I found on the system is the pair system, the curated pair system, which basically allows, which wants to democratize strategic, sophisticated strategies, right?
Yeah.
And can you share how third party managers like investors or arbitrageurs or bots can fit into Stablejack's ecosystem, and what kind of users this appeals to?
So like this product called actually like curated pairs, it is similar to like actually what Morpho Euler has on their lending market, but unlike like just the lending curator, like they become a yield curator. So basically, like they can do anything with like they can do anything actually like curators basically. Like they will define the strategy, they will define what they are going to do with the money that they are going to get from the deposits, and like they will try their best to provide the highest yield possible in the market. Because if they make more money for their users, then they will make more money for themselves. But what we do basically is that we can tokenize those positions and like allow you to get either fixed yield or leverage yield on top of it. For example, like basically like you might say that yeah, okay, this people like these guys know what they do, but like I don't think that market is going to be very good. So I want fixed yield. Like whatever market goes, I know what I'm going to get. So let's say like it's like 10%. At the end of the year, I know what I'm going to earn. So this gives you like a flexibility and had a peace of mind about like results. So you don't from starting now on, like you don't need to worry about what's going to happen with the market, but how the curator will perform. You are fine. But on the other hand, if you think that like that curator is quite skilled and like markets will favor them, you can actually like have long that position basically like, and like for example like if the curator performs 10%, you can get outsized returns like 15%, 20%, and like actually like in some cases this can offer you like outsized returns in terms of a risk reward structure that you can never find anywhere else. uh, but like basically like normally curators only work for high net worth individuals and for people with like actual like accredited investors. But by Stablejack, actually like an average Joe like us, like actually like can access those products and actually like make money with safe and solid ways.
Hmm. Let's get back to the previous point. I want to dig deep into that liquidation and funding fees problem a bit more. See, this is the main problem in the traditional leverage strategies. There's a huge liquidation risk. You can lose your whole amount of invested amount, and of course, there's funding fees. So, how does StableJack eliminate those risks while still offering high exposure? What is happening in the background, which is like helping the positions to remain secured, even when they are like highly exposed?
So, for example, like let's give like stake Ethereum as an example. Stake Ethereum has like something around 3.5% yield, and also price volatility. Like it goes up and it goes down, and like
Correct.
you and I actually like can agree with each other, and like tell this like if the price goes up, I'll get all the price action, but
Correct.
in exchange I'll pay you my yield. So, for example, like after a year, the situation could be that like Bitcoin, Ethereum price goes up 10%. So you have $100 and I have $100. So what ends up being is that my $100 becomes $110, but
Correct.
your position also goes up to $110. But since we agreed on with each other, I'm getting your $10. So I have actually like at the end $120. So even like the ETH price goes up 10%, I have actually like 20% return. So which is actually like quite good because I got leverage exposure. And like since it's not a leverage contract like exchanges, we don't pay each other a funding fee. So it's a cheap. And what you earn is that you get 3.5% yield, staking yield for yourself, but also I gave my yield to you, so you have something around 7% yield on your position. And like whatever the ETH price is, you are getting the same yield. So, for example, I gave you like a positive scenario where the ETH price goes 10% up, but it could be the vice versa, and like it might actually like end up losing 10% in value. So in that scenario, I eat the losses, and like your $100 will stay the same, but also you will earn the staking yields. So in that sense, actually, like if you think that the markets will not go well, you can get the yield, or if you think that markets will go well, you can get the volatility and like leverage in return.
But what if the Ethereum price goes down by 10%? So the investor would have $90 with him, and
Yeah,
the
yeah.
other, what in that case
I'm
happens?
compensating you by giving my $10 to you. So
Hmm.
like you're having like $100 at the end of the day, but I'm going to have $80 at the end of the day. So
Correct.
10% down, but I lose 20%. Like it's like how leverage works actually,
Okay,
but like with no liquidation.
but there is no liquidation. Okay,
Mhm.
got it. So your base amount can actually decrease,
Yeah.
increase like increasing the exposure of your yield, but
Mhm.
the principal amount will not have the risk of getting liquidated. And this can only be possible in the decentralized space, right? Because in the centralized space, your whole amount is at risk.
Yeah. Yeah. Definitely.
Awesome, awesome. Um, let's talk about the fixed yield in the space known for volatility. How do you maintain that, and who is that ideal investor for your fixed yield offerings? How do you offer the fixed yield?
Sorry to interrupt. Like I would say, like the investors like would be like those actually like who are looking for stablecoin yield for sure, who could be like hedge funds, high net worth individuals. In most of the time, I would say like for this product, the main users are those. And like the way it works is that, so consider like an example, like there's a yield bearing stablecoin and it offers like 15% yield
Hmm.
at this very moment, but you don't know what is going to happen in 6 months, 3 months, in even like in 1 month.
Hmm.
So what we do basically is that we agreed on a specific yield, let's say like 10%. And from now on, like for let's say like 3 months, this on stable you can get 10% fixed yield. So what
Hmm.
happens is that there are two sides. The one is volatility token and the other is yield token. And like all of the yield generated by the collateral asset goes to volatility token. So like let's say it's 15% yield generated. So all of them goes to the volatility token. So they are getting actually like something around 30%. Because why? You have $100, I have $100, and if it
Hmm.
earns 15%, then it means that you earn 15, I earn $15. But since I'm getting all of them, I have $130. So that's the case. But the thing is, since I guarantee you that you are going to get 10% yield, I'm giving you like a 10%, $10 to compensate you. So you get
Hmm.
like $110 and I have like $120. So even if the
Hmm.
collateral asset has 15% yield, I got 20% yield, and you get 10% yield, fixed yield. So it would be the same for you. Like if let's say like if it didn't perform 15%, but rather like let's say 8%, you would get 10% because I would compensate you,
Hmm.
whatever the case is. So
And the
like it
compensation is happening from the principal amount only, right?
Like in some cases, it could be from the principal, like
Hmm.
if the yield is quite bad, like let's say 1%, 2%. But in most of the time, it's from the yield itself. Like for example, if it's 6%, like all the collateral will earn like I would earn like for example 2% ish, something like that. But I wouldn't lose my principal.
Hmm. Okay. And the independent strategies, like these are the third party developers who are working with Stablejack in order to
Uh,
give the
like
users.
it could be third-party developers, but like right now, most of them actually are like the collateral assets that we accepted on Stablejack. For example, like we are working with Avant, like it's a yielding stable coin,
Hmm.
and like they are using on-chain delta neutral strategies to make to earn yield. So like there is nothing like we do, everything is done by themselves. and like we accept their stable coin as the collateral. Like same with Athena, same with Resolve, and like any other stable coin actually.
Hmm, that is really good. Looking ahead, what's your long-term vision for Stablejack? Do you see this evolving into an all-in-one yield and derivatives layer? Do you see it evolving similar to what Aave has been doing or Compound has been doing, where there is lending, there is borrowing, and then there is a lot of these differential tokens? Or is there a specific niche that you're aiming to dominate?
Like we want to focus on what we do best. We create yield products for users with the most safe possible, the most safe option in the market. So we will focus on that. Like we will work with stablecoin issues, LSD issues, yield protocols that actually extract yield and value from the DeFi, and we will structure those yields to our users for them to get the most out of it. So we will, yeah, you'll see more yield opportunities on Stablejack, more volatile opportunities on Stablejack, where you can long any asset without liquidation risk. We want to add Bitcoin soon, so we want to actually like Stablejack as the main derivatives hubs in the ecosystem.
Hmm. Okay. And how do you see Stablejack fitting into the broader DeFi spectrum over the
Like,
next 2
yeah,
years?
you see that as the like the main brick. Like, for example, if you're a stablecoin issuer, you need more users, you need more yield to offer, you can use Stablejack. Like you are a LST protocol, you need like new users, you need like someone to long your asset, you need new use cases, you can use Stablejack. You are a new chain, you need innovative products apart from DEXs and lending markets who can power your points program, airdrop program. Like you need to use Stablejack, you need to bring Stablejack. So we will actually like see it as a brick in the DeFi ecosystem as in general.
Hmm. Okay. And as you see, there is a lot of institutional interest and narratives around restaking or RWAs or LSTs. Where do you think Stablejack will fit in the institutional spectrum?
So like RBS will be the like one of the main products in the ecosystem soon. That is for
Mhm.
sure. And like actually like we already agreed with few Turkish banks and like banks in MENA region to offer their RBAs as collateral on Stablejack. We are also talking with Latam fintechs for doing such things. We believe that RBAs are going to have huge impact, and like Stablejack can be the home for them to actually like gain a foothold on the DeFi ecosystem. Like they can offer like for example, you can long your favorite stock on Stablejack without liquidation risk, or you can get fixed yield, leverage yield on top of the like bonds or like other securities. So we
Mhm.
believe that Stablejack will position quite well to get most out of this RVA trend actually.
Hmm, awesome, awesome. And let's wrap it up with a few simple questions for you. For users hearing about Stablejack for the first time, what's the best way to get started, or is there any specific strategy or use case that you would recommend them if they're exploring Stablejack?
Mm. I would say, like, depending on what they look for example, if they love leverage, I would suggest them to use our XAVAX product. They can long AVAX without liquidation risk. If they love points, they can use any of our points token, like we have for SCUSD, STS, and Repois on Sonic. And for Avalanche, we have RSAVAX. Like the names are a bit difficult to understand for many people, but like
Yeah.
this is what crypto is about. Like they can use these products to maximize their points exposure, or they can, like if they want safe yield, they can use our yield tokens. They offer above market yields with like very low risk. So I would suggest them to try out these products.
Hmm. And where can people follow up your journey and get updates or jump into the community? We'll make sure
Like
those links are tagged
yeah,
if
we
you're
are very
about.
active on Twitter and Discord, so they can follow us on those channels. Also,
Hmm.
like they can ask any questions they have either on again like Twitter. They can DM us. They can tweet about us. they can come out Discord and ask their questions. We are quite active and happy to answer any of their questions.
That is awesome. I think we've all done. Thank you so much for your time. It was an amazing session. We dug very deeply into the tech prospects of the platform. And of course, you answered them in a very simple way so that any naive user can also understand. Any person who is very new to DeFi, he can learn about Stablejack through this video. Thank you for your time, Sextus. Um,
Thanks, Harvey, for having me. Like, it was pleasure to be here, and like I really love the conversation. I hope people love this table deck and like use it. Whenever they want to ask a question, like we are here, so happy to answer anything. Coming up.
Absolutely. We'll be making sure all the links are listed down in the description below. And thank you for your time again, Rehan. It was amazing having you on the platform. And we'll catch up with you soon. Have a nice day. Bye bye.
Bye bye.